If you have any questions, you may comment the same. If you are interested in the class, please click the like and also share it to others. If you haven't subscribed the channel yet, please do it now. Accounting records of not-for-profit organizations. Not-for-profit organizations are required to keep proper accounting records as required by law. They usually keep a cash book in which all receipts and payments of cash are recorded. They also keep a ledger containing the accounts of all incomes, expenses, assets and liabilities. In addition, they are required to maintain a stock register to keep complete record of all fixed assets and the consumables. They do not maintain any capital account, rather they maintain a capital fund or general fund. The capital fund goes on accumulating or increasing due to surplus generate, life membership fee, donations, legacies, etc. received from year to year. Next, final accounts or financial statements. Not-for-profit organizations are also required to prepare final accounts or financial statements at the end of each accounting period. Though these organizations are non-profit making organizations, they are not required to prepare trading and profit loss account, but it is necessary to prepare final accounts consists of the following. Number 1, receipts and payments account. Number 2, income and expenditure account. Number 3, balance sheet. Number 1, it is receipts and payments account. Receipts and payments account is prepared at the end of the accounting year on the basis of cash receipts and payments recorded in the cash book. It is a summary of various receipts and payments of cash during an accounting period, whether they are related with the current period, previous period or succeeding period, whether they are of capital nature or of revenue nature. The point to be noted is that it does not show any non-cash items like depreciation. The opening balance of cash in hand or cash at bank is taken on the debit side or receipt side. The receipts of cash all are taken on the debit side and the payments all are taken on the credit side or payment side. The cash in hand or cash at bank at the end of the year is taken on the credit side or payment side. However, if it is bank overdraft at the end, it is shown on the debit side as the last item. Now, salient features of receipts and payments account. Number 1, it is a summary of cash book. It is identical with that of a simple cash book without discount and bank columns with debit and credit sides. Receipts are recorded on the debit side while payments are recorded on the credit side. Number 2, it shows the total of all receipts and payments during an accounting year, whether they are related with the current year or not. Number 3, it includes all receipts and payments, whether they are of capital nature or of revenue nature. Number 4, no difference is there in the receipts and payments made in cash or through bank. All receipts and payments are shown in this account. Number 5, non-cash items like depreciation, outstanding expenses, accrued income, etc. are not shown in this account. Now let's discuss the format of a receipts and payments account. Receipts and payments account for the renting: receipts amount, payments amount. On the debit side or receipt side, balance brought down as cash in hand, cash at bank, then subscriptions, general donations, sale of old newspaper, periodicals, waste paper, sale of old sports materials, interest on fixed deposits, interest or dividend on general investments, locker rent, sale of scraps, proceeds from charity show, miscellaneous receipts, grant in aid, legacies, specific donations, sale of investments, sale of fixed assets, life membership fees, entrance fees, receipts on account of specific purpose funds, interest on specific funds, investments, etc. Now on credit side or payment side, if it is bank overdraft at the opening, then it is balance brought down bracket bank overdraft, then wages and salaries, rent, rates and taxes, insurance, printing and stationery, postage and courier, advertisement, sundry expenses, telephone charges, entertainment expenses, audit fees, honorarium, repair and renewals, upkeep of ground, conveyance, newspapers and periodicals, purchases of assets, purchase of investments. Now if it is cash in hand or cash at bank at the end of the period, then balance carry down cash in hand, cash at bank. But if it is bank overdraft at the end of the period, then on the debit side, balance carry down bank overdraft. Now both the sides of the account are totaled and the account is closed. We will be back soon with the income and expenditure account and the balance sheet in the next episode. For the easy access of the classes, please subscribe the channel. It is free by clicking the subscribe option, and for getting notifications, click the bell icon below.